traders, Gary Wagner here just before 12 noon in Honolulu, 5 o'clock in New York, first day of February 2018, and this is the daily report for gold and silver. Nice upside continuation in gold, with gold closing at $1352.30, putting it up about $9.20 on the day. Silver, although did close lower, closing about 3 cents lower at $17.21, with a tremendous decline in US dollar value, losing over 0.5%, trading off by 51 points at 88.44. It's an extremely critical area. We will discuss that in detail as we pull up our technical studies. Mixed bag in U.S. equities. The Dow did close higher, up 37 at 26,186. And Bitcoin continues a dramatic fall from grace, now trading just at about $9,000 per Bitcoin, with the CBOE at 92.60 and the CME's futures contract at 90.20. Traders, we are witnessing follow-through buying in the gold market today, with most active April gold futures currently trading near the highs of the day, up about $9.30, trading at $1352.70, puts it up about $9.60 on the day. Effectively, we have this market truly forming that V or pivot point that we were anticipating. And what I mean by that is, as this market came down, it did find support at the 23% retracement point. We have this nice pivot or key reversal in which we had solid confirmation that this market was extremely oversold as it traded, even though it had only come off of the recent rally's price point by a level of about 23%, the 23% retracement. That, of course, is a retracement of this entire rally. It's simply a matter of time as to whether or not this particular rally will have enough steam to break through these former tops at approximately 1262 and move to higher ground. My current anticipation and belief is yes. And as I said on yesterday's show, our current target falls first at 1380 to 1383. That was the former top of the market, not last year's high. We'll have to go to a weekly chart to see that. And if, in fact, we can take that price point out, I am looking for gold prices to challenge $1,400 once again. And traders, I've gone ahead and pulled up a weekly chart continuous contract of gold so that we could take a look at those tops that I was looking at. And the price point that comes in around 1380, in fact, are these tops that come in right here. And we can see that we have already matched the former high that came in as the high of last year. Of course, the one price point I am referring to is the highest price gold has traded to ever since concluding its dramatic fall from grace from 1900 plus down to these lows at 1040. That came in at the end of 2015, and it is these lows that historically mark the end of a multi-year correction. From there, we had this dynamic rally, and we have not been able to take out these prices since gold traded to this level back in 2016. I've also put a Fibonacci extension, and on this extension, I'm using our benchmark wave or rally as this particular rally from 1200 to 1363, and then I am starting or fixing that point at this current rally. When we do that, a one-to-one relationship between this rally and the current rally would take gold just shy of 1,400 per ounce to about 1,395. We could also see a break above that, and if we do, the logical point to look for would be about 1431. But of course, before we get there, we have to effectively take out current pricing and go ahead and see if gold pricing will challenge these former highs that came in, call it mid-2016. We did initiate a long position yesterday, entering the market at roughly $1349.50 in most active April gold futures. As I said, market is just a tad above that, currently at $1352 and change. My recommendation is to maintain your current long position and to maintain your current stop level. And traders, if you recall from yesterday's show, I did talk about the fact that we omitted silver from this current trade. My sense was that I really wanted to see some sort of confirmation to the recent upside action we saw in the precious metals markets overall yesterday, because I wasn't convinced that silver would follow suit. And in fact, we did not get that follow through. Silver is currently trading down fractionally, down about 3 cents, but it is trading lower at 17.20. You can see that in terms of this red candle here. I still believe that there is good support at $17 per ounce in silver, but I also feel as though there's very strong resistance at $17.50. And it is for that reason that my recommendation on silver right now is a neutral stance with equity dollars moving into a long gold trade as opposed to a long silver trade. And traders, lastly, I do want to take a look at the US dollar because it has been dollar weakness that has really propelled gold as well as silver to higher pricing. We can see these lows. They came in approximately December 11th of last year. That's when this market bottomed at 1238 and began to pivot to higher ground. When we take a look at the dollar index, it is truly at a critical area, under pressure right now, trading at 88.45, down by over 0.5% on the day. And it is no coincidence that when we look at this top in the dollar that occurred mid-December, it occurs exactly at the same time when we saw a key reversal or a pivot in gold prices. The dollar is trading at the lowest point it has been since it began to sell off. This, of course, is a daily chart, but the real understanding of where the dollar could go can only be seen if we convert it to a weekly chart. The 61.8% retracement that occurs at 88.58. And we can definitively see that current pricing has fallen below this on a weekly basis. And what is most alarming is that this break below this critical level of support could signal a further meltdown and an accelerated free fall from lower pricing that we're currently seeing in the dollar index. Now, I draw your attention to this yellow line that I just drew. It comes from these series of tops here, as well as a small little area in which this particular price point seemed to indicate some support. Comes in just above 84, and the market is at 88. In other words, a solid break below this, to me, indicates the potential for a further decline in the dollar index of about 4%. Traders, as you know, we did put on an effective long gold trade yesterday. Market was trading roughly at 49.5, closed at about 52. So we do have a couple of dollars on the trade, but more importantly than that, today we saw follow-through buying, which I believe was essential to our current trade. We got in under a number of factors, but one of the primary factors was the identification of a 3-over morning star. Typically, we wait for confirmation, but I wanted to get us in at a good pricing structure. So today's follow-through was absolutely essential. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.